The number one issue today is not Sarah Palin's wardrobe, and it's not Barack Obama's high school chums. It's the economy. Will the bailout work? And we're going to find out how it got here tonight with Lynn Brewer right here on Public Exposure. I'm Stan Emert. Lynn, welcome back.
Thanks, Stan. It's good to be here.
What we've been needing is someone to untangle this entire mess, and we figured you're just the one.
Well, sadly enough, it started with Enron. So it started with the Enron loophole that was created at the encouragement of Phil Gramm at the time, and allowed trading, online trading of derivatives, which are these credit default swaps that are at this house of cards of $62 trillion. And
with a T?
62 trillion with a T, house of cards that we're sitting on right now, that our economy is teetering on these credit default swaps. They were allowed to be traded unregulated because of the Enron loophole.
Before we go too far, though, I just want to remind everyone that you can learn more about Lynn and reach her at theintegrityinstitute.com. Go on that website and just find out all sorts of information. You'll find out what Lynn's doing today. We're going to talk about it just a little bit. But I want to go back in time a little bit. When you wrote the book, Confessions of an Enron Executive, and we're actually going to go to a little bit of fortune-telling that you did. From page 313 in the book, let's go to the first quote. This book was written in 2002. Enron wasn't just some corporation based in Texas that played fast and loose with other people's money. It was the failure of a system, a microcosm of the system of humanity. 20,000 people came together in a commonality, and it went bad. Next quote. Look to Enron to foretell the future. What is at stake is our very way of life. If we are to survive, we must find a way to return compassion, wisdom, and the highest standards of integrity to our corporations. I don't think they read your book.
No, sadly, I think they did read it, and I think they thought they were above it. And as we're finding out, like myself, nearly that same time, Warren Buffett also said, you know, these derivatives are weapons of mass destruction. Enron was a microcosm, or, you know, analogous to what we're seeing now, a run on the bank and a house of cards that couldn't sustain itself.
Well, so how different in behavior was Enron from AIG, Lehman Brothers, Bear Stearns, et cetera, WAMU?
Well, of course, we don't know how deep the fraud in those corporations may run. In our case, it was the CFO at Enron that really was at the focal point. But the bottom line is that Enron traded commodities and, in fact, traded these credit default swaps as one of those financial mechanisms. And
well, why didn't everybody fall then?
Well, in the energy sector, they did fall. And that's what we're finding now, is that were it not for this bailout, corporations would be falling. And you can see the ones that are falling are the ones that the government isn't there soon enough with enough capital to be able to keep them going.
Let's go back to exactly what these things are. You mentioned Warren Buffett. In 2003, he was quoted as saying, unregulated derivatives are weapons of mass destruction. What are they? So,
first of all, unlike insurance, but similar to insurance, insurance has a clause that if you have an accident, they pay. But in order to be able to write those policies, they have to have reserves, cash reserves, that if there is a Katrina or a 9/11, they can pay. Well, in the unregulated world of default swaps, basically what happens is, let's use Ford as an example. Ford legitimately would need to trade a credit default swap against its, let's say, dealers. If their dealers all of a sudden quit selling cars and they can't pay their bills, Ford wants to make sure that they've hedged against that risk.
Yeah, let's actually go to a graphic. We have a graphic of that sort of is what is a credit default swap, and right there it is up on the screen. We've got a callable and a puttable. And it looks complicated, but it's really not all that complicated.
It really isn't. It's similar to buying insurance. I go to you and say, I have a feeling that my customers may default, or somebody that I've loaned credit to or extended credit may default, and so I want you to guarantee that in the event they do, that you'll pay for what I've lost in that situation.
And so these were tied to mortgage-backed securities. when the mortgage-backed securities went bad, the credit default swaps went bad too.
Yes, so
And AIG was on both ends of that deal.
yeah, so what happens in these credit default swaps, if I sell you a swap and you come to collect, I better make sure that I've bought a swap at the same time. So that's called a call and a put. We close that loop, you know, and so it's you go short and long in the trading analogy or survival mode of closing this loop to hedge your own risk.
Sounds like being a bookie. You don't care. Just as long as you can be, you know, relatively even on both ends.
You're absolutely right. And the problem with this $62 trillion in credit default swaps is only 10% of those are legitimate forward-type credit default swaps. The rest of them are speculators.
You mean like oil prices?
Like oil prices, like we talked about before. So they are buying up these credit default swaps, and then what they will do is, in order to collect on them, they want to roll the dice and make sure their number comes up, and so what they will do is they'll short sell stock to drive that company's stock down, and in doing so, they get to collect on the credit default swap.
Why is that legal?
Because the Enron loophole says it's legal to be able to trade between two counterparties just, you know, online. When it comes to the mortgage-backed securities, remember this subprime lending, what we did is we created this glutton of housing, right? As people could get access to lots of credit, because really what allowed us to get access to all of that credit were these credit default swaps. So what happened is...
I'm not making the connection.
Okay.
Help me understand.
So I go to WAMU, and
Okay.
I take out a mortgage for $300,000 on my home. WAMU packages all the mortgage together, all the good ones, the bad ones, whatever, and they sell those.
$25 million blocks.
Absolutely.
Okay.
They'll sell those to Lehman Brothers or to Bear Stearns or to Morgan Stanley, and they'll buy a credit default swap on them. But these mortgage-backed securities...
And who do they buy it from?
So it could be all sorts of things. So WAMU may, in some cases, buy a credit default swap to make sure that if these mortgages go bad, that they're covered in their position.
Oh, I see. So they would buy the credit default swap from Lehman Brothers.
Could, or they could sell this bulk of mortgages to Lehman Brothers, who would then go out and get a credit default swap in the event that those things happen.
And they may indeed buy the credit default swap from WAMU.
Well, they could, absolutely. So it is this intertwined house of cards where no one really knows whether it's truly 62 trillion or maybe larger than that.
62 trillion. I mean, our entire budget. I mean, all of the economy of the United States government is 1/10 of that, roughly.
Yeah, this bailout was actually a good deal. It was like going to Walmart and getting a De Beers diamond. You know, I mean, you're getting a really good deal at $700 billion, because if you don't bail them out at $700 billion, our entire economy, global economy, because remember, in order for WAMU to write these swaps or any other bank, they have to borrow money. Well, they go to other countries to borrow money, and they bank against the LIBOR in London, other different things, and ultimately, when the credit froze up because people couldn't pay their mortgages, people can't pay their mortgages, WAMU can't pay their loans, you end up with a...
Should I move to Pennsylvania and start making furniture?
At least you would have something tangible.
But there's nothing. That's what these credit default swaps are, intangibles that don't, there's nothing behind them.
Based on inflated values of homes that are not realistic.
True. We got to take a break. Just want to remind everyone we're very fortunate to have Lynn Brewer with us, who is the founder of the Integrity Institute. And go to the integrityinstitute.com, and you're going to learn an awful lot about this former Enron executive who wrote the book, The House of Cards, Confessions of an Enron Executive, and now goes about helping corporations and helping educate us on what to ethically do to help your business. And there's certainly are a lot of people who can learn a lot of things about that very topic.